Hello traders, Gary Wagner here, approximately 11:30 in Honolulu, 5:30 in New York. It is Wednesday, May 26th, 2021, and this is the daily report for gold and silver, a most interesting 24 hours with yesterday gold closing at $1899.90. Opens in Australia, trails above 1900, and overseas hit an intraday high of $1,913. That was until it came into New York's trading session, because dollar strength definitely contributed to the demise of 1900 gold. And as we look at gold currently, we are tracking somewhere around 1896 and change, putting it down a couple dollars. The question is this the first of many attempts before we can effectively see gold close above 1900? Or could this be a point in which the market has some sort of a correction? Considering that this market is traded well over $200 higher, a typical rally in gold is between $100 and $160. At any moment, for any reason, we could see the markets correct. So we want to be very, very cautious. We did raise our stops, but we do have a new price support area around 1880, and any kind of dip below, call it 1890, would probably trigger moving the stop up at least to approximately 80. But we'll talk about that during the show, which begins now. Traders, it has been a most interesting 24 hours when we look at changes in gold prices. If you recall from yesterday, gold futures closed in New York at $1899.90. As it moved into Australia, it did uptick to 1900, trading around 1900 to 1903, roughly in that area. But as it moved into Hong Kong and then London, we saw the market rise to an intraday high today of $1,913.30. However, that all changed when trading resumed in New York, and dollar strength once again was a vast contributor to gold prices settling lower and back below $1,900 per ounce. As of the current time, which is roughly 5:30 in New York, we have gold at $1896.40, putting it down $1.60 on the day. While we could easily see gold make another play and effectively close above 1900 in New York, that did not occur today, which lends me to hypothesize that 1900 is still a formidable resistance area that, at least at this point, has not been breached. Traders, this next chart that we are looking at is a weekly candlestick chart, and I'm not really focusing upon these upside targets because I think that they'll occur within the third and fourth quarter, possibly, of this year. That's these three green lines that are drawn from an extension. However, we can absolutely say that 1900 remains resistance. As I said, we're currently at 1896 after trading to a high of 1913 in overseas trading. However, assuming that at some point we break above this level of resistance here, our next real target comes in at approximately 1960, and it's based upon a series of tops that you can see right here that also corresponds to a level at 1941, and that is the 23% Fibonacci retracement. So an effective close above 1900 or above, I believe, would take gold pricing between 1941 and 1960. As you know, we have been utilizing a very, very simple area chart. This is based upon closing prices because it gives us a very, very quick and brief overview of the market conditions. And what we can say is, although we've had a defined rally that I still believe is currently intact, during that rally, we have definitely had periods of correction that have come in approximately every 2 to 3 weeks. We certainly got a downtick today. That doesn't mean that we won't see a recovery quickly. However, Unless we have an effective close in New York above $1,900 per ounce, I cannot be an advocate to believe that we will start to challenge the recent highs that came in back at the beginning of 2021 as well as November, and those price points came in at approximately 1954. Therefore, traders, we moved our stops up yesterday to 1871. We are long from 1851. Maintain your current long position as well as your current stop. Also, we are going to be looking to roll over our positions from the June into the most active upcoming contract, which will be the August. And so we're trying to find a strategic point to do that. A dip would be primarily one of the better ways to do that. So be aware that we will send out a trade alert within the next week or so, at least getting out of or pulling profits on our current trade if we believe a dip is imminent, and then try to rebuy lower. If we're on a strong moving rally, we will simply do a rollover, which means that we will simultaneously sell the June and buy the August contract. There's no doubt copper has been in a defined shallow downtrend, a corrective period of sorts, after hitting highs above $4.87. That occurred back 2 weeks ago. Since then, we've seen a methodical decline in pricing. However, it seems as though that might have ended today. We can see it in the Henkinashi charts because we are definitely getting those pivotal candles. Currently, we have copper at $4.52 per pound, and that, as I said, is a net gain of about a third of a percent, and currently up about 1.45 cents on the day. And traders, one of the reasons I remain extremely bullish on copper long term is by looking at a longer term chart. In this case, we will once again use an area chart to illustrate that point. When we look back in March, the beginning of the pandemic, that comes in right here, we can see that the market forces did take copper prices down as the economy globally went to a screeching halt. But then in about the middle of March, just as we saw in gold, it began to take off and take out with a vengeance, because when we consider that back at that time period, we were trading just over $2 a pound, which means that copper has more than doubled, and we have seen defined corrections come in throughout that entire period. It didn't go straight up. It was not a parabolic rise. In fact, it was a slow and methodical rise. But what I like about copper right now on a technical basis, because the fundamentals are strong, is that although we saw it weaken for the last couple of weeks after hitting this new all-time record high, this was the old record high here. This was the highest monthly close on record, $4.41 per pound. You can see that as it came down, it hooked and appears as though it's hooking back to move to the upside, which is why I believe it will make another challenge of $4.65, and then another challenge of the record high, which comes in above 75 cents on a closing basis. I believe 85 cents when we look at intraday charts that contain highs and lows. Maintain your current copper position along with your gold position. Maintain your current stops. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.